Welcome to my November 2024 update on the latest savings account news and top rates. Now, bear in mind that I'm recording this on Wednesday, the 6th of November, and tomorrow, Thursday, the 7th of November, is the next Bank of England Monetary Policy Committee meeting, which is when they're going to announce what they're going to do with the base rate. And the expectation is that it's going to drop from 5% to 4.75%. So with that in mind, when we do get to the best paying rates, just be aware that there could be a lot of movement coming after this rate cut, or there might not be much movement at all. It really depends. You never quite know what's going to happen, but just bear that in mind. And what I'll probably do, if there are a huge number of changes over the next 7 days, I'll do another update next week, just so you've got a better sense of where things are. Of course, there's always movement all the time, which is why over at becleverwithyourcash.com/savings, myself and the team, we're updating morning and evening, and if not, a few other times during the day as well, what the best rates are across all the different providers. But anyway, we'll get back to the top rates right now later on. But first of all, a little bit of savings news. And some of these obviously will involve some rate movement as well. And the first one is a little bit of battle going on between two cash ISA providers. We've got Trading 212 and MoneyBox, which have generally been at or near the top for most of the year, at least the Trading 212 one since it's launched, which was sort of later in the year. But they've been generally at the top. But while everywhere else we're seeing rates falling, these guys are going, no, we want to be at the top of the table. So one of them increases the rate, the other one follows. The other one increases, the other one follows. So we have had a spell of this happening back in September where things moved around a little bit. And we've had it again over the last week, I think 3 movements in the rate. So if I'd recalled this, 8-9 days ago, the rate would have been 5.1% for Trading 212. And then it went up, I think MoneyBox went to 5.13. So Trading 212 went to 5.13. Then MoneyBox went to 5.15. And Trading 212 went to 5.15. Well, now they both offer 5.17%. So in a world, as I say, where rates are dropping, this is a good news story for us. And for your money, you can get 5.17%. And it's one of the few places out there, those two accounts, one of the few places which are giving you above 5%. There are obviously some exceptions, and we'll talk about those later on, but it's a good place for your money. Remember, ISAs, if it's got the best rate, for your easy access cash, it will beat some of the other easy access accounts. It'll beat all the other easy access accounts that we're going to talk about. You don't have to sort of think, oh, ISA is just for one thing or the other. Go whichever one has the best rate. Although, of course, you do have that £20,000 allowance for new deposits in a financial year across all the different types of ISA. So if you already put money into an ISA, just be very careful you don't go over that 20,000. And if you're looking to move your money from a normal savings account into an ISA, again, only up to £20,000 can go across depending what you've already deposited. But that's the kind of good news there, a bit of a battle going on out there. And incidentally as well, Trading 212, while it has increased the rate on its cash ISA, it has also increased the rate to the same 5.17% on the cash you have in uninvested cash you have in its general investment account. So if, obviously Trading 212, as the name suggests, is generally a trading thing. The cash ISA is a proper savings account which has financial services, compensation scheme, protection stuff, easy access, all that kind of stuff. But the money you have in the investment account that isn't invested, that rate has also increased. So it could be if you do have larger amounts of cash, you want to get that top rate on, you can move them across, just with the caveat that this isn't a normal savings account. Does not have the financial services compensation scheme protection. However, the funds that it's invested in are very, very low risk. So you'd hopefully be fine, but if you're not comfortable with that, then there will be other options which will have that protection that you can go for with a slightly lower rate. What else to talk about? Okay, so this is a couple of regular savers to tell you about, which is interesting. One of them is open to everyone, right? And this is Principality's 2025 Christmas Regular Saver. The name, as it suggests, is to help you, or is designed at least to help you put money aside every month until Christmas of next year, which is a great habit to be getting into because Christmas is always an expensive time of year. But of course, you don't have to use it for Christmas. You can use it however you want. But the idea is to give you access to a 7% rate for 12 months. Now, the most you can add into this every month is 125 quid, which is low compared to some of the other Best Buy regular savers out there. But the big thing about this one, compared to the other ones with similar rates, is you don't need a current account to open it. Anyone can open it up. So whether this is an additional regular saver on top of one of the other ones you've got, and we'll talk about the best ones later on, just a bit more aside every single month, or whether you don't want to go or can't go through the faff of opening up extra current accounts, although again, not really a difficulty doing that a lot of the time. Just be careful if you're doing lots of them in one short space of time. Open these current accounts like First Direct or Nationwide. There will obviously be a hard credit check on those. But that is a good one to look at. If you do put the full £125 in every single month for 12 months, then you're looking at £56 in interest, which again might not sound like a huge amount, but if you had it in an account paying less, then it would be less as well. And so remember, regular savers, what's great about them is it's new money you're saving every single month. So you're getting paid, you've got new money to put aside. That is the best possible way to save them. I know people still get confused and get angry and think I'm not getting the full 7%. You are. It's just you're putting money in every single month. Now, the other regular saver is potentially much better than this, but it won't be available to everyone. So if you already covered a current account update at the weekend on the YouTube channel and over on the website, which talked about a new beta, which basically means trial current account from Zopa. Now, Zopa historically did credit cards and then moved into savings. They're now launching a current account. And if you are able to open it, go into the Zopa app. If you already have it, it will tell you straight away if you're able to apply for this new thing. There won't be a credit check. You can just open up this current account. Now, the current account itself is relatively limited. It does give cash back on the bills, but again, not one for most people that's exciting. But it does have a couple of savings features. And the big one here is a 7.5% paying regular saver. That makes it top of the table in terms of pretty much anything you can put into right now. There is one that pays more than that, but it is quite limited. So 7.5%, and also you can put up to £300 into it every single month. So if you do that, the maximum £300 every single month into this account for 12 months at 7.5%, you'll get £145 interest. Now, slightly annoying about this one is that standing orders don't currently work. It will come to the current account later on, but they don't right now. So manually, at the start of the month, you're going to have to go in and transfer that money across. But it doesn't take too long to do. And I think that's a great one in terms of getting a reward because, again, this is an easy one to get if you are eligible. Remember, this is just a trial. It's just beta right now. Hopefully, this feature will still be in there. The rate will still be there when it properly launches. But if you don't want to miss out on that and you can get it, maybe it's worth snapping it up right now. The other savings feature that comes with it is in the current account itself. It pays 2% interest on balances in there. In theory, it's a nice to have, but broadly speaking, you don't want to be having a lot of money in your current account at any time for a number of reasons, but one of them is because you will be losing money because you can get more high rates of interest if you move your cash elsewhere. So again, it's there, but I generally don't think it's a reason to move your current account to it just yet. Now, I've got a couple of other quick ones before we get into the top rates. This is just something that happened to me, and I thought I'd just share it with you because a few lessons we can take from it. So I've recently changed my phone, and setting up the apps on the phone, the banking apps, took a bit of a while because I've got so many of these current accounts and savings accounts because my job is to tell you all about them. It took a while to set them all up and get them through, but generally it was all pretty easy. But one thing that was pretty much universal for all of them is Face ID had to be set up again, which means logging into the app manually with a password or a PIN, whatever it might be. Now, obviously, it's a long time since I've done that because I've been using the Face ID for such a long time on these apps that in one particular instance, well, I couldn't remember many, but I've got most of them stored securely elsewhere. But in one instance, Chip, I couldn't remember the PIN. I tried all these combinations and none of them were working. And well, that doesn't matter because there's an option to reset your PIN. Fine, right? I'll do that. But then I got an error message each time I tried to do that. And I thought, okay, I'll delete the app and reinstall it. Go through the process again, same error message. I will make sure the app is fully up to date, and it was. Turn the phone on and off, same error message each time I do this, but I'd leave it a few days. Maybe it's just a glitch that's happening right now. Leave it a few days, nothing, leave it a few days, nothing. So you think, okay, well, what you want to do then is you want to talk to customer service, don't you? And of course, the problem with Chip being app only is that you really need to be on the app to access that customer service. So that was no problem because I couldn't get into the app to talk to them. But I did find an email address for help. So I contacted them on the 28th of October. Still by the 1st of November, nothing. So I emailed them again. And then 2 days after that, on the 3rd of November, I finally got someone emailing me back saying, to try and sort of deal with the issue. Now, as it happened, I don't really have any money in Chip. I don't really use it for savings. I use it more for a hack for my Halifax reward accounts every single month at the moment. But I have used it in the past. It does give a decent rate right now, as we'll see later on. But that was almost a full week without access, and I couldn't even talk to anyone about it. So the lessons here are, one, make sure if you do have any PINs and passwords, they are securely stored somewhere. So you remember what they are, because you shouldn't have the same thing every single time, which makes it hard to remember them. But don't just scribble them down on a piece of paper in your wallet or by your desk. Have them in some sort of password protected online locker type thing if I was you. Number two, don't have all your money in one place, because again, if you need to access it and you can't need it all there and you can't, it's another good reason to spread it around a few different places, even just some of it, just not all of it in one place. And finally, don't leave it to the last minute, because if I had needed to access that cash, a week had gone by before, I've been able to get it. So make sure that in a big, anything really, small or big, but if you need to access your cash, you know it's coming along in a separate savings account. Make sure you move it across in good time to your current account so you can actually then can spend it. One other quick update to you. Now, a lot of different accounts, I've told you about this in the past, a lot of different accounts, particularly easy access ones, have changed their way they offer interest from a variable rate to a tracker rate, which basically means it'll be whatever the base rate of interest is from the Bank of England minus whatever. Now, a number of them have done that. I've told you about some of them. I can't tell you about all of them because they all happen, but there's one significant one to tell you about, because I know many of you do have a Chase savings account, a Chase current account. Because back in October, they actually changed the base rate, their rate from a tracker of minus 1.15% to minus 1.25%. They announced it a bit before that, but the change actually happened in October, which means if you haven't logged into your app, haven't noticed it, your rate will be, rather than 3.85, it will now be 3.75. Or if you had that bonus that was on offer a couple of times this year, then it will be, I think it was a 1% bonus, was it? So it'd be 4.75 rather than 4.85. So just worth knowing that that rate has dropped down a little bit. And remember, this is a tracker rate, so if the base rate does get cut on Thursday as expected, then actually it will drop down to 3.5%. Now, a number of them do this. Chase aren't the only ones, but it's something you could easily have missed and not realize you're actually getting less interest right now. Now, last week we also had the budget. Now, I did a whole load of content on that, covering you exactly what was in there, but savings specific, I thought it's worth going over some of those again. There wasn't anything really announced at all in the speech in Parliament itself, but in the documentation that followed, and there were pages and pages and pages of things hidden in there, there are some interesting things to talk about. Nothing massively exciting, but they are worth knowing. One of them is good news. The Start to Save scheme has been extended. This is a really, really good thing for those of you who are eligible basically on certain benefits, where the government will give you essentially a 50% bonus for putting money aside. We're talking about small amounts for a short amount of time, but if you are eligible or you know someone who is, really, really worth doing it, getting them saving, getting some of a return on there, because that's a huge amount of money getting back. So that was due to end. That has been extended for a couple more years. In terms of other allowances, the ISA allowances are going to stay at £20,000. They are not going to change, and they're not going to change until 2030 at the earliest. Now, some people might get a bit annoyed about that. I don't think it's a problem really, because most people do not have £20,000 to save. So it's still a very, very, very generous allowance. But that's the most of money. Remember, new money you can add every year. But of course, year after year, that carries on. So you can obviously, if you do have a lot of money, that gradually can build up over time, including any interest or investment gains that you make on that. That's also included in that ISA, that tax-free ISA allowance. Also, where there was no change, which was disappointing, was around the lifetime ISA, with lots of hope that maybe something would finally be done around that £450,000 price cap for your first home, which in lots of areas of the southeast, or if you're buying as a couple and you are buying a bigger home, has been a problem. You've not been able to use the lifetime ISA. So I hope that one, they would increase that, and two, they would get rid of the penalty that you pay if you withdraw the money without using it. So if you can't use it for your home because it's too expensive, but you still want to use the savings in there, you will be penalized to withdraw that cash. It works out effectively, it's a 25% penalty you pay, but effectively that means you lose about 6.5% of your cash. Hope that would change. Again, nothing. So really, really disappointing. The other thing, I've told you about this one before, and again, it's investing rather than savings. But the British ISA, that has been scrapped. That was never even made it out of the kind of the whiteboard, I guess, where people are thinking it up and talking about it, and the Conservatives announced it, and then Labour have scrapped it. It isn't going to happen. But that's it. That's pretty much what happened when it comes to savings in the budget. If you want to find out about everything else that was covered there, then obviously do check out the other content that I've produced. So let's have a look at the best paying accounts right now. As I said, if there is a huge amount of movement because of the base rate meeting, I will do another one of these updates. But also over at becleverwithyourcash.com/savings, you can see all these options plus many more. I'm just giving you the top ones in each of the different categories here, just the highlights. Now, the top paying easy access account is linked to a current account. This is the Santander Edge Saver. That is 6% AER on balances of up to £4,000. And after a year, that rate will also drop down. But if you have got that current account, the Santander Edge current account, which is required to get this, does come with a £3 fee. every month, then that is definitely worth opening up that Edge Saver as well. And incidentally, there is also a £150 Santander bank switch offer going on right now. So you can get a bit of extra cash for switching over and potentially open up this Saver account. Don't forget, if you have the joint Santander Edge account, you can open up 2 Edge Savers, which means you can get that rate on up to £8,000. Now, in terms of other easy access, we've already touched on a lot of these. The Trading 212 Easy Access Cash ISA, as I said, 5.17%. That is the best place for your money right now if you want to just be able to access it quite easily. If the limit there of that £20,000 is going to be a problem, then Chip is offering 5%. Though this is a limited access account, which means you can only make 3 withdrawals a year. If you make 4 withdrawals, the rate will drop. There is still the Kahoot Sunny Day Saver at 5%. That lasts only for 12 months, and that has a limit of £3,000. But again, you can get a solo account and a joint account there, so potentially increase that if you want to, the balance there. And I've got one more here. Again, there are many others below this rate, but I'm just giving you the top ones right now. The Monument Bank via Raisin is offering 4.87%, which goes up to 85k in there. Already mentioned that easy access from investment accounts and uninvested cash on Trading 212. That is also 5.17%. Now, if you're happy to put your money away in a notice account, the top paying ones now across these different lengths are, for a 2-month notice, Charter Savings Bank will pay 5.06%. So that's 60 days notice you need to give to access your cash. For 3 months, the best one here is BLME at 5.15%. 4 months notice, Charter Savings again, this time 4.96%. And for a longer period, for 6 months, Ecology Beyond Society will give you 5%. Again, there are many other options listed over at becleveryourcash.com/savings. But as you can see there are a few options there which are giving you 5 or above. Again, variable rates, but they might be better options if you know you don't need to access the cash and some of the easy access ones. Okay, let's talk about fixed savings now. 3-month fix. The top one here is currently Oxbury Bank, 4.87%. Top 6-month fix is with Atom at 5%. These are ones that have just been released. The Atom ones. 9 months, also Atom, 4.8%. Now, 12-month fix, we're looking at IS Bank via Raisin. That's 4.85%. And 18 months, Gatehouse is paying 4.55%. Then if we're looking at 2-year fixes, Market Harbour Beyond Society is 4.65%. Atom pops back again for a 3-year fix at 4.5%. For a 4-year fix, we're looking at Smart Save, 4.38%. And then 5 years, again, we have Atom at 4.5%. So again, you can see these rates, if you've been catching these updates on a regular basis while I've been doing them, you can see they are all dropping down. Those fixed rates are all falling. I will talk more about fixes when I cover the base rate announcement and give you a sense there. If they give us an idea of where they think the base rate might be going over the short and medium term, what that might mean for fixes as well. Okay, on to regular savers now. Obviously, there is that Zopa 7.5% one, which might be available to some of you. That's definitely worth a look. I've not included it in the top ones here because, as I say, it is restricted to those who can access that beta current account. At the top, there is an 8% pay-in regular saver from Principality Beyond Society. It's only lasts 6 months, so technically you are getting the highest possible amount of rate you can, but for a shorter space of time. So it's up to you whether you want to faff around with the admin on that one. The next ones are from First Direct and Cooperative Bank, which are paying 7% as well. These do require current accounts. Both of these do have bank switching offers right now. Then we've got that Principality Beyond Society Christmas Saver I mentioned earlier on, also at 7%, but that lower monthly deposit. And then we do have a couple more always worth a look, so I will mention them. Again, there are many others, but Nationwide is giving 6.5%, and Club Lloyd's are giving 6.25%. There's also the NatWest and RBS digital regular saver at 6.17%. All of them worth a look. All of them require a current account. All of them also do have bank switching deals right now. And there is much more information about all of those bank switching offers over at becleverwithyourcash.com and in some separate videos on the YouTube channel and separate episodes on the podcast. And now let's end with looking at the best ISAs right now, the top picks at the time of recording this. We've already mentioned that Trading 212 Easy Access one at 5.17%. When we look at a 1-year fix, the best one here is from Virgin Money, 4.51%, although unusually compared to the rest, it does require a current account. If you don't want a Virgin Money current account, then you're looking at 4.47% from Shawbrook, which isn't really much of a difference there. Now, for 2-year fixes for an ISA, Castle Trust Bank is paying 4.31%. When we go down to UBL, also 4.31% for 3 years. UBL is back again for 4 years at 4.05%, and Shawbrook is back for 5 years at 4.12%. Again, there are many, many, many more options all listed over on the website if these ones don't suit you for whatever reason. There is also, when we talk lifetime ISAs, the top one paying here 5.09%, an uninvested cash in Doddle by AJ Bell. So you'll get a decent rate there, but it's uninvested cash. Got to be careful that if you do start investing their money there, which might not be a bad thing when it comes to lifetime ISAs, if you're thinking about retirement rather than buying your own home, then there are charges that apply. But there are other options if you don't want to go down that route. Pure cash ones, all listed on the site. So there you go. My name is Andy Webb. Thank you so much for watching this November 2024 update on the latest savings accounts. Head to becleverwithyourcash.com/savings for more rates and all the updates.